In today's economic landscape, understanding inflation is crucial for making informed financial decisions. Whether you're a seasoned professional or rookie investor, the concept of inflation plays a pivotal role in creating and managing your financial portfolio. Today, I have Keisha Samadi, Wealth Manager, and Roland Thomas, Senior Manager for Trading and Treasury, to discuss the impact of inflation on wealth creation and preservation.
Presently, inflation is at 0.8% in the Trinidad and Tobago market and 3.3% in the US market. It is noteworthy to mention that in 2022, inflation rates in both markets were over 8%. Whilst it may sound like it is not of direct concern to our Trinidad and Tobago market, it is important that we be proactive and include inflation in our wealth management process.
Yes, Keisha, while we're looking at inflation, let's look at what it really is. Inflation is an increase in the prices of goods and services. And in Trinidad, we are no stranger to inflation. As you would have said in the stats before, Trinidad would have had inflation of over 8% a few years ago. There are many types of inflation, but in Trinidad, we really face two types. One being the cost-push inflation, and two, imported inflation. Cost-push inflation is where the prices of the factors of production go up, and that causes the price of those goods produced to increase. Imported inflation is where we are actually importing inflation in other markets because the goods that we import come in at higher prices. And you could have seen that tie into the stats that you gave before. When the United States had high levels of inflation, Trinidad also had high levels of inflation because we do a lot of trade with the United States. And that definitely diminishes your purchasing power on your portfolios. So Keisha, you've been in wealth management for quite a few years. Can you tell us how inflation has impacted your clients' portfolios?
Absolutely, Roland. In managing my clients' wealth over the years, inflation is a key factor as this could affect one's preservation of wealth. Inflation can decrease one's purchasing power as it reduces the value of money over time. What that means in simple terms is that the same amount of money can purchase less goods or services.
I totally agree, Keisha. Do you know that also happens with your savings? Whether you have savings in cash or in a traditional savings account, inflation continues to eat away at your returns. Even if you're invested in long-dated fixed income instruments, while the rate might have looked good at the start, inflation may be eating away at your returns as you move through that investment. So it is important to continually look at that return versus where inflation is in the market.
Additionally, Roland, as you mentioned, fixed income, a major sector of the market that is affected greatly by inflation would be those on fixed income streams such as pensions or fixed annuities. Retirees fall into this category, and what makes them so vulnerable to inflation is that their income doesn't increase as prices rise. Roland, at Guardian Asset Management, we have successfully implemented investment strategies that have assisted in mitigating inflation risk and protecting our clients' wealth from inflation. It is of utmost importance to have a well-diversified portfolio. In constructing our clients' portfolio, we include a mix of asset classes such as stocks, bonds, and commodities, which tend to perform very well during high inflationary periods.
Yes, Keisha, I totally agree. Diversification definitely helps in preserving wealth during times of inflation. We at Guardian Asset Management, when building portfolios, especially during inflationary periods, look for companies that have strong pricing power. These companies are expected to continue to be able to perform well and continue to produce returns even during inflationary periods. And what do I mean by pricing power? These are companies that can raise prices without reducing sales. So no matter how they increase their prices in order to cover costs, their customers continue to buy. Once that happens, your investment will continue to earn you returns as you go through that inflationary period.
In addition to what you mentioned, Roland, during high inflationary period, consumers tend to reprioritize their spending, focusing on needs rather than wants. As a result of that, we at Guardian Asset Management include these companies when constructing client portfolios to assist in mitigating inflation risk.
Keisha, it is important to note too that we don't really have to fear fixed income investments. While at the start I would have advised that the long-term investments are subject to inflation rates eating away at their return, what you have to do is be smart about the fixed income that you go into. We need to go into shorter term instruments that will mature in a short space of time and allow you to reinvest and participate in the higher yields that you get during inflationary periods. A variation to fixed income investing, as I just described, is investing in floating rate securities or step-up coupon securities, as it avoids you from having to keep reinvesting but allows you to benefit from higher yields as inflation rises.
Great points, Roland. Long-term financial planning as well as regular portfolio reviews are of utmost importance. At Guardian Asset Management, we do conduct regular portfolio reviews and make the necessary adjustments to ensure that the portfolios are aligned with inflation and changing economic conditions.
Well, Keisha, it was a pleasure discussing with you today the impact of inflation on wealth preservation and creation.